Hi, everyone, and Thanks for having me here. My name is Rainie and I am the Managing Director of the Hong Kong PropTech Association. We are an independent not-for-profit organization here based in Hong Kong, and the association aims to build a collaborative ecosystem of real estate technology stakeholders, from property developers as well as technology companies to investors and startups, by creating awareness, employment, education, and advocacy, as well as investment opportunities around PropTech, not only in Hong Kong, but using Hong Kong as a hub to foster communication, drive innovation, and ultimately encourage more technology-enabled solutions to improve our lives, our cities, and the environment regionally. So again, it's a pleasure to be here and look forward to sharing more with my fellow panelists here.
That's great. Thank you, Rainie. Next, Wilson, maybe you can do a self-introduction as well.
Thank you. Hi, everyone. Rockstead Capital, we're a boutique asset management firm in Singapore that focuses on market trading instruments. Specifically, I represent a capital protected fixed income fund and high performance quant fund. I am not in private equity, not in VC, not in PropTech. I think my role on this panel is to add some diversity, because we all know that diversity is a good counterweight in both our portfolios, and hopefully during our time together this afternoon, hopefully I can provide some color around the macro environment around sustainable finance. Thank you.
Thank you so much, Wilson. Next, we have Kelvin here from our very own Switch Automation. Maybe you can give a little introduction about your background.
Sure, sorry. Afternoon, everyone. I'm the VP of Corporate Development here at Switch. To keep it brief, I joined Switch last year in February after a stint in investment banking and asset management. And my role is to help the broader team with our fundraising and our inorganic strategy. Switch Automation is a platform to digitize and decarbonize buildings. And so before I hand it back, I just wanted to convey my gratitude to our esteemed panelists, Rainie and Wilson, and also to our audience online for taking the time to be a part of this webinar today. So looking forward to the discussion. And with that, Serene, I'll hand the floor back to you.
Okay, thank you so much, Kelvin. So firstly, for our first topic, we are going to talk about trends in green finance. So the first green bond by World Bank that was launched in November 28 set the stage for sustainable investing in the capital markets. So it has been quite a while since then. So how has green financing evolved since 2008, and how did it move to the forefront of the financial industry in recent times? Maybe Wilson, you can answer this question.
Thank you. I thought a lot about this question to make it a short, punchy answer. And I think it has evolved to the forefront because simply there's money to be made, especially in the last 3 to 4 years when the inflow of funds has been exponential. By some accounts, by the end of last year, there's now sustainable investments totaling about 35.3 trillion, and that represents more than a third of all the assets in five of the world's biggest markets. So the question is, how did you get here, right? Because the easiest way to sell anything is actually to give people what they want. And investors, both individuals and institutionals, are happy to write a check these days to anything with an ESG label because it makes them feel good and it look good. And we will touch on greenwashing later in this webinar, but I ought to start us off in a positive, with a positive macro observation about the importance of finance and sustainability. Because on the one hand, while the financial sector has certainly become the epitome of greed and short-sightedness, its ability to achieve global sustainable objectives and halt climate change, and its ability to create a more balanced and sustainable world is severely underestimated. No other sector in the world is as global in all its constituents. Stock markets around the world are connected in nanoseconds. Money and investments are moved at the speed of light from New York to Shanghai to London to Hong Kong. Everything in the financial sector is global and is therefore a critically important player for global sustainability goals and climate resilience.
Okay, thank you so much for your insight, Wilson. So how is the role of green financing for more sustainable buildings play in this situation? Rainie, maybe you can answer this question.
Sure, absolutely. So the real estate industry makes up about half, I believe, of global carbon emissions when accounting for construction and building performance. And that number can go even like go up quite a bit for cities like Singapore, Hong Kong, where we have more dense, buildings in the city. So with the backdrop of COP26 and increasing policy-driven initiatives on net zero strategies, in my opinion, green finance is going to be vital both for financing net zero new builds, but also the significantly larger challenge here is the financing of the retrofitting of the existing building stock, which is basically, converting the brown to the green. And that could be a significant chunk of the projects that would require green financing in order to convert some of the buildings that are ages old or decades old to more sustainable, fit for future purpose. And this is a significant portion of work where I believe, specifically for cities like Hong Kong and Singapore, that there'll be a huge amount of opportunities as well as demand going forward.
Yeah, thank you so much, Rainie. So what do you think it will be the challenges associated with green finance, Wilson?
Sorry,
yeah.
The challenge, I think the overarching challenge is a lack of channeling and focus. It is certainly not a lack of capital. On the demand side, what we are seeing is that the challenge is how to channel capital into innovative projects so that change can actually happen now. On the supply side, it is a matter of changing the incentives, moving from the demands of a quarterly performance cycle to a much longer 8 to 15-year cycle, because that is the least amount of time needed for green projects to actually bear fruit. Second, we need to revisit the types of vehicles utilized. We need to deploy a more regional approach that is focused on regional issues. So instead of a global approach, we need to go deep. We need to consider private-public partnerships, consider smaller, more focused vehicles with clearer outcomes that investors can have transparency and know what they're investing in. Lastly, to counter greenwashing, here's an insight about financing at a macro level. We're actually not investing in technical solutions, not in products, not in value chain. We're actually investing in people and people's ability and capability to transform ideas into tangible results. People's ability to be creative and to persist against the looming challenges of climate change. The quality of people that we invest in is extremely important.
Okay, what do you think has changed in the context of COVID-19 with regards to green finance?
I think things has certainly accelerated in the past 2 years or so. Myself, it's been a lot easier to kind of get meetings and meet up with individual institutional investors over Zoom. So there is that degree of acceleration in terms of, I guess, virtual contact. But from my experience, deal closing wise, there's still something to be said about meeting in person, visiting the site, meeting in person, having that face-to-face meeting in order to close that deal.
Yeah. Okay, so currently verifying ESG claims and identifying, potential fraud risk can be difficult, because nowadays there's this very heightened risk of greenwashing. So what are the kind of measures we can take to ensure green credentials for buildings? Maybe Kelvin, you can answer this question.
Sure, Serene. So if I were to address this question specifically within the context of greenwashing, it is fair to say that there are definitely issues with the shape and form of the building's data that is currently available. And a large part of this is rooted in history, where there isn't a ton of transparency as to what goes on behind the four walls of a building, let alone a portfolio of buildings to begin with. And that's because the data sits across multiple siloed and disparate systems, which then leads to the problem where effectively the lack of data and fragmentation of disclosure is exactly where the risk of greenwashing begins. So the resolution to ensure green credentials within buildings is twofold. So one is more endogenous within a corporate setting where real estate players and their respective executive leadership teams can prioritize sustainability initiatives, or at least embed sustainability around current strategic objectives so that the sustainability team is a force working in concert with short and long-term business priorities and not set up against it. You will need engagement, you will need subscription, and you will need board level and organizational buy-in to ensure that real estate players hack away at these barriers to get at their data. And then secondly, once the players have their data, then at the exogenous level, you can then have meaningful discussions with other stakeholders. In this case, the regulators, who can then, to your point, Serene, set green building standards and credentials that are both uniform and informed. So ultimately, as per what Wilson has already mentioned earlier, it's going to involve both private and public sector partnership to drive this. And it's not hard to conceive a scenario where the most forward-looking and nimble real estate players, let's call them the trailblazers for the sake of argument, they will get at their data first and will end up having the most ear and face time with the regulators to write the rules and then set these standards. And then the laggards, on the other hand, will end up being hauled over the compliance line of these standards set by the trailblazers, whether they like it or not.
Yeah, this is very interesting, Kelvin. Rainie, do you have any opinions about greenwashing as well, like pertaining to what Kelvin just shared?
So I think for greenwashing, it's an interesting question, right? In general, like it's a question about data, but if the data is too easy to get, then it means people can easily manipulate, and in order to have greenwashing. But at the other end of the spectrum, if there's too much time-consuming data collection process in order to demonstrate that sustainability, would that be an ideal solution? I think I would also put a question mark on the other end of the spectrum. So it is, I'll say, I definitely agree that it'll be a combination of art and science to a certain extent, and more importantly, to have that private and public sector collaboration across the industry, the agency, and regulatory bodies to collectively work that out. And if you look at the sort of the secondary investment market, that's how those ESG ratings in those markets that start to flesh out the framework, or the risk framework, or the assessment framework, as well as some of the rating methodologies. And for buildings itself, there are certain certification programs well recognized across the region, let's say in Europe. And I think in Asia, there's still room for that, for the partially due to the history reasons and the heterogeneous of the various regions and various real assets by themselves. But there's definitely room for collaboration in terms of collectively working out a standard for somewhere that everybody can hopefully align toward.
Yeah, I think having a data standard is definitely useful, because I think there are a lot of companies that claim they are sustainable, but they do not actually meet global sustainability targets. Yeah, so being able to establish this standard can actually help all these companies benchmark their business goals. Okay, so currently the requirements for data are constantly evolving due to environmental changes or regulatory updates with governments throughout the world, especially and in Asia as well. So therefore, there is a need for buildings to verify green claims on a regular basis, so which can get quite costly and time-consuming. How do you think technology can contribute in terms of ROI for better business continuity? Kelvin, probably?
Yeah, sure. Thanks, Serene. I think there are a couple of layers within the question, so let me take those in turn. So firstly, I agree with you that the notion, climate risk and the regulatory response to that is pressurizing the real estate sector to fully utilize the data from their buildings. But it's clearly not just the regulators. I mean, you've got investors and tenants who have signed climate or green pledges, who are putting additional pressure on the sector to decarbonize their buildings. So absolutely, the requirements to use data holistically as a corporate asset is driven by regulators, but you also have a lot of other factors aligning and galvanizing the sector to utilize solutions to coalesce and analyze that data to unlock further benefits for all stakeholders at the table. This then segues into the second part of your question, focusing on ROI and how does technology contribute in this regard. And things that come to mind, like for instance, right, like optimizing energy usage, modulating temperatures through dynamic set point control, all help to drive the cost side of the equation downwards. However, what is overlooked, and which is discussed by a select number of our clients, is that the data can also be monetized to drive new revenue models. And my sense here is that an increasing number of built environment players do perceive their data as siloed, but there is a dichotomy on how the data, once coalesced, should be used. So we at Switch believe that the darlings of the built environment sector will be those that can look beyond securing an ROI in the short term and appreciate how technology can drive novel revenue line items to increase value even more exponentially for all stakeholders. So, long story short, I mean, technology is definitely a powerful tool to impact the status quo. It can be used to drive towards any specific outcome. It will make for better business continuity, both economically and environmentally. And when the above is kind of enabled, the ROI will pretty much take care of itself.
Yeah, thank you, Kelvin. So what role will technology and digital solutions play in reaching net zero targets, and how can we ensure that these are deployed in the most effective way, Rainie? Maybe you can share your insights on this.
Yeah, sure, absolutely. I think it's a great question, right? And Kelvin already shed quite a bit of light on it. So from a policy perspective, we all know that, incorporating the climate risk standards, such as those from the TCFD, Task Force on Climate-Related Financial Disclosure, I believe, and certain emission reporting standards or disclosure regimes that can, have been created to incentivize a company to properly prepare those documents and contribute to decarbonization, have been put out by local regulatory bodies such as the Hong Kong Exchange or MAS. And as Wilson previously kind of discussed and put the points on, is that there has to be a balance from what the investor is looking for, as well as what the lender is looking for and what the borrower is looking for, because it's a whole holistic ecosystem. So when technology comes into play, what I see mostly, at least in the immediate term, is to help on getting the data right. And it's the similar thing that I've mentioned previously, because you need data, you need standardization to draw a line whether this project is green or not, or it's semi-brown, semi-green. And there's obviously lots of demand for green projects or green products from investor perspective. And increasingly, people will not invest on something just because they have an ESG tag to it. They would actually look into it. They want to know more about the details. So how can they know more about the details? And that comes to ultimately to data, because when you say net zero itself is also a measurement. So in order to monitor, measure, and assess the actual performance and whether these proposed green financing projects are in fact realizing the greenness they said, and assess its impact to actually achieving the net zero targets, I think technology solutions as well as digital solutions can play a critical role in terms of getting these data out and monitor it in the ongoing format. And again, I think as previously mentioned, the greater part of it is really about transforming the existing bronze stock to green, and therefore any cost-effective solutions to digitalize brown buildings and retrofit them into more sustainable would be a big trend on our path to achieve net zero. Personally, I'm less worried about the new builds, but increasingly, is there any efficient, effective way to help those aged brown buildings to be digitalized and measurable in terms of their carbon emission or in terms of their actual targets that they are hoping to achieve, is what I would say is the most important things going forward.
Thank you so much, Rainie. So currently we already have some questions, but please feel free to use the Q&A function so that our panelists can address them at the end of the discussion. Okay, so next, okay, so for a question for Wilson. So what are the some of the relevant actors to raise ambition and close the current financing gap?
Right, and I think I can dovetail my answer into one of the Q&As I see listed there. I'll give two local examples and one kind of global standard. Here in Singapore, I would say look to Enterprise Singapore. They have a enterprise financing green scheme. If you're a project developer, SI, or technology and solution enabler working in clean energy, green infrastructure, clean transport, Enterprise Singapore has a scheme administered by the FIs, DBS, UOB, OCBC, HSBC, that finances up to 70% of qualified costs. The second player in Singapore, the big one, MAS and its Green Financial Plan. Specifically, among other schemes, they have a green and sustainability linked loan framework for SMEs that co-funds up to about 90% of expenses, up to Sing dollars 180K over 3 years. So those are two good examples of private-public partnership. And to the Morisaku, I think to your question, yes, it is lower interest rates, and you will see that happening actually in China. They are very aggressive about getting their national banks to offer very low interest rates to green projects. But the gap that I see here on the market trading side is it's a top-down versus bottoms-up, right? The top-down, the regulators, the government entities are trying to do their best and trying to close the gap with institutions, right? They approach the established institutions. Institutions are still not as nimble to be able to address that marketplace. So there's definitely a space there to kind of close that gap between public and private partnerships. Lastly, in terms of standards, I'll just flag to everyone on this call that one of the more broadly accepted carbon emission framework standard is by an organization called the Greenhouse Gas Protocol, and they divide up their carbon footprint into 3 different tranches, right? Scope 1, they associate emissions with the firm's own resources and operations. Scope 2, emissions from energy consumption, and Scope 3, everything else that is emission from the firm's value chain. And the organization is called the Greenhouse Gas Protocol. I'll stop there. Thank you, Serene.
Thank you so much, Wilson. Maybe something from Rainie. Do you know of any similar initiatives in Hong Kong and the rest of Asia with regards to any solutions to help close the financing gap?
Sorry, just to clarify, is it on the financing or is it more on incentivizing the carbon pricing part?
Oh, sorry, in incentivizing the carbon pricing part.
So as far as I know, apart from some of the mandated corporate disclosure mentioned earlier, there could be also opportunities to encourage participation in the overall carbon trading. For Hong Kong specifically, there's the opportunity to tap into China's national emission trading scheme. And as we know, the Chinese government has pledged to net zero quite heavily, and with a lot of strategic initiatives coming out top down. So from a Hong Kong perspective, potentially we can also establish some cross-border carbon trading market in the Greater Bay Area to leverage the national emission trading scheme that I believe is the latest that I've seen in the market and have been discussed quite a bit.
Thank you so much, Rainie. Okay, so now we are currently starting our Q&A session. So we have a question from Faiz Adri. So the question is, how do you convince public sectors, government agencies to embark on a net zero journey when they're only worried about cost savings?
I can take that a little bit. Sorry, someone's going to answer that? Okay. I can take that a little bit, and feel free to jump in, my fellow panelists. I think one thing is, most of it is actually in the private sector. I think the public, the public listed companies at least make up only about 1/3 of the carbon emissions. So a lot of it is happening in the public sector, and this part I will breach over to that of a carbon tax, right? That's the only way to kind of penalize the externality. According to some reports, a global carbon tax of at least $135 per ton is needed, and up to $5,500 per ton in 2030 is needed in order to get us down to our a net zero kind of place. I would say that on the market trading instrument supply side of things, the goal should be to make it much easier for investors to track the carbon emissions of their portfolio. And today it's very hard to do so accurately. Selecting a fund with zero emissions might feel good and feel virtuous, but actually investing in and holding accountable those that can cut their carbon footprint faster might even be better. And I'll pause there.
Yep. Any further thoughts, Rainie or Kelvin?
So sorry, I wasn't sure whether the public is meant to be publicly listed companies or whether the public is to be government-related public sectors. So just to add on top of what Wilson has already covered, I believe, from a public policy perspective, if there are top-down policies, strategic initiatives driving toward the net zero, then honestly, it is something that requires a lot of behavioral change. Apart from mandatory requirement on disclosure, on certain things, on tariff, etc. The other side is, I would say, we as a not-for-profit association, along with other not-for-profit bodies or industry bodies, we would also try to encourage the public sector, being the government kind of public sector, to have subsidies of piloting things or installing renewable energies, as we've seen in the past in a few cities and as well as regions. So what they can do, apart from providing hopefully subsidies in monetary terms, another kind of thing the public sector might consider is to also pilot some of the proof of concept projects at their public infrastructure, because at the end of the day, they're also asset owners, right? They own a lot of assets. And if they would allow technology solution providers to pilot their POC at those real assets, to demonstrate both the technical and financial feasibility, I think that would also be something helpful to foster more of a public-private sector partnership in order to achieve those net zero targets.
Thank you so much.
Yeah, sorry. Yeah, no, I just meant to just add on to what has already been said. And, I think some of the couple of panelists has already mentioned that the public sector are big owners of large assets. And, I think in this current day and age, the various government sectors spanning across geographies and countries are increasingly well educated about the spectrum of climate risk. And so now everyone is asking the same hard questions, and everyone's taking a hard objective look at their assets. To what extent will my building potentially be stranded? Can my buildings now be insured? Now that actuarials are increasingly baking in climate risk into their models, can I even lease this space out? So basically, the public sector, I would say, is in a way indifferent from the private sector, that everyone is taking a hard look at their assets right now. Everyone's trying to find the best solutions out there to green and decarbonize their assets. And that's where the idea, which I believe Rainie has mentioned earlier, about the private sector working in tandem with the government sector, with the respective public sectors to green and decarbonize their assets.
Thank you so much for your answer, Kelvin. So next, we will move on to the next question. So we have this question that came in. Companies are starting small, mostly focusing on small projects or stayed stagnant at the proof of concept stage. But banks are looking to finance projects above a certain threshold due to economies of scale. How do we address the misalignment between supply and demand? Maybe Wilson, you want to take on this question?
Yeah, it's not an I'm tempted to say there is definitely a misalignment, and I think more work needs to be done there for the marketplace, right, to match up buyers and sellers. I wish I'm able to say that there's a lot more uptake and a lot more demand on early stage financing, that there's a lot more people willing to kind of put their money where their mouth is and do that. I like to think that it's a trend that's going that direction, but I would say it's unfortunately not happening as quickly as we would like to see it. Hopefully it will accelerate over the next couple of years, and not just a matter of changing things at the margin of just a mere reallocation of money and mere relabeling of capital and calling it green.
Yeah, I think that things are definitely accelerating in the next couple of years, because I think last year is the year where people started talking about ESG investment. And I think this year and the next will be the years that people will actually start to take action and work on initiatives to bridge all the gaps, so that all of these of our companies can really achieve the sustainability targets that we have been talking about. Okay, I think we have time for one more question. Okay, so for our last question, do you think there is a lack of decent quality data on companies' environment profiles? How is this hindering the uptake of green finance? Maybe Rainie, you can take this question.
Yeah,
How does
sure.
the data quality look like?
I think I kind of touched on it, right?
Yeah.
The availability of data is one problem to be solved, and the quality of the data is another. And I would say, personally, I think we have issues for both. And then it could also touch upon the question that was previously asked, right? When we talk about smaller scale projects that are looking for green financing, ultimately, is it because banks are hesitant? Is it because the scale of the project, or banks are hesitant because they don't understand the greenness or proposed greenness because of the lack of let it be availability or quality of data, so that they don't have the confidence to finance it? And I think both are possible, right? There are green bonds, green mortgages, as well as the so-called sustainability linked loans for broader purposes. And the latter one is obviously much harder to measure. So yeah, I'll say those are definitely areas to work on, and those are the opportunities. And I think Switch obviously is one of the players in the area to try to make the data more measurable and with more transparency, and hopefully with the collective effort from the various stakeholders in the industry, we can be aligning on certain standards, which then can be used by the finance institutions to use as their sort of rules to judge whether certain financing can be approved or not when the projects come. Obviously, there's great demand for green projects, as I mentioned, that we've seen. But I think data is definitely, in my opinion, the ultimate root cause for all of that still at the borderline of defining whether something is brown or green, or how green a project can be.
Yep, thank you so much, Rainie. Do you have any further comments, Kelvin?
Yeah, maybe I'll just chime in quickly here. So I think, as Rainie alluded to, definitely one of the main issues is the shape and form of the data that exists out there. And secondly, also, perhaps another factor that can be said to be, holding back the development of green finance is to what extent, the data is accessible. And basically the question remains on how do we get relevant and cohesive ESG data beyond the remit of the institutional investors and into the hands of other pockets of capital like retail. So the point being that at Switch we talk about democratizing buildings data, but it's also the same. The point being that democratizing green finance is intricately linked to how you democratize the access to ESG data. And to that end, again, you will need the regulators and industry to collectively work together to achieve this outcome. And perhaps if I just may venture one more point here, another barrier to the uptake of green finance is the accountability factor. So for instance, pertinent questions need to be asked regarding the kind of mechanism that's in place for the finance industry or the underwriters of these instruments to enforce and show to the end client the sustainable outcome when you invest in these products. So for example, if you have a syndicate of banks underwriting a green loan to a company who discloses the uses of proceeds is for the construction of a solar farm, how do you ensure that the proceeds are used for precisely that purpose and not for something else? So the point here being is that there's a potential disconnect between products being labeled as green finance products and the true sustainable impact it creates on the ground. And if the finance industry were to bridge this gap, that will most certainly accelerate the uptake of green finance instruments going forward.
Thank you so much, Kelvin. I think this was a very thought-evoking conversation. So maybe I could ask for your closing remarks before we end this webinar, and also let our participants know where to find you as well, like on LinkedIn or website. Maybe Rainie, you can start first.
Yep.
Sure, absolutely. Again, thanks everyone, and thank you to Kelvin and Serene for having me here. I think it's an interesting discussion, and definitely learned a lot from my fellow panelists as well. So yeah, to reach us, you can search at HK PropTech on LinkedIn, Twitter. I don't know Twitter actually, Instagram, LinkedIn, Twitter, Instagram, and Facebook. We are most active on LinkedIn. Look forward to more intellectual exchanges in the future.
Awesome, Rainie. Maybe Wilson. How
Thank
do you know
you,
where to
fellow
find you?
panelists. And thank you everyone for taking the time this afternoon. I'm simply at wilson.tan@rockstead.com, and there'll be a good way to find me, or just Google Rockstead Capital. Thank you.
Thank you so much, Wilson. Kelvin?
Yeah, no, it just remains for me to say and to thank my fellow panelists who graciously carved out the time today for this event, and also to everyone here on this webinar for also taking time off your day. I believe our marketing team has put our contact details up on the slide. So yeah, if you have anything or if you feel that you'd like to explore a solution further, just feel free to reach out to us. We are here to help.